Welcome back to Market on Close. I'm Marley Caden. Oracle has been the story of the day with its massive rally after its earnings, projecting huge growth in AI infrastructure revenue. Joining us now to discuss this move is Nigam Arora, the founder of the Arora Report. Now, Nigam, always great to have you with us, especially on a big day following such a huge move from Oracle, closing up about 36% on their revenue forecast. What were some of your major takeaways from the earnings report?
Well, Marley, you asked a great question. Earnings weren't good at all. It's the projections that market got excited. And the projections are totally eye-popping, right? So let's look at it. The infrastructure revenue last year, 10 billion. This year, 18 billion. Okay, well, that's not such a big deal. But they're saying in 2030, it's going to be $144 billion. And then they talk about the remaining obligations, meaning contracts they have signed, $455 billion. That's $500 billion. I mean, those are just unheard of numbers. And that's what got everybody excited. But the earnings, if you look at earnings for the last quarter, they weren't good at all.
And they're unheard of numbers, and that's certainly true. Every headline is including these projected revenue numbers. Do you think that the numbers themselves are attainable?
So I'm going to share with you some data. I've been watching a lot of shows, including yours, that nobody's talking about. Okay. So the rumors, not confirmed, that out of $455 billion, $300 billion is from one customer, OpenAI, right? And then if you think about it, OpenAI may have a revenue of only $10 billion, and they're signing a $300 billion contract. So obviously OpenAI, we know, can raise money. And then Oracle itself is going to have to spend massively in infrastructure. So Oracle has gone from a capital light business now to a capital heavy business. So there's a risk. And then I will share something else with you, Marley, which nobody talks about. So in the middle of all this excitement, stock up 36%, over $40 billion worth of stock traded today, right? So you would think that the money flows in the stock would be very, very positive. Even at its peak, when the stock was hitting 345, the money flows hit positive about only $400 million. Okay, think about it. $40 billion stock traded today. At its peak, the money flows were positive only by about $400 million. And at the money flows were falling. Money was flowing out of Oracle. And for the whole day, we have money flows of negative $400 million in this stock. So that says that at a time when everybody's so excited, and what I call a Momo crowd, they buy, right? Because look at the surface. Great projections, the stock is going to the moon, they're excited, they're buying. There were a lot of sellers today into the strength, right? Without those sellers, we would have seen money flows on a day like this, probably $2, $3, $4 billion positive when it's all said and done, and we're seeing minus $400 million flow. So that's looking below the surface. Now, the thing that people don't understand sometimes is the positioning. So if you look at the chart, yesterday, there was a very heavy volume. There were a lot of short positions being established, right? Because Oracle had moved up about 45% for the year, and our concern was that the software growth is not where it could be. We saw with Salesforce, CRM, AI monetization is hard. So that's why short sellers were kind of jumping in. And short sellers are right. The earnings weren't good, right? But then Oracle threw in all these massive unheard of projections. And now there was a short squeeze. That started to move up, and all the momentum players then jump in. So that's what happened. Now, let me share something else. Now, we got in one of our services in Oracle around $114 billion, $114, valuation of about $274 billion, right? And our target before today was $307 to $318. We kind of got there and surpassed it a little bit. So that's about $1 trillion, right? So Marley, you and I have talked about other stocks, right? Where we bought it, where we thought it could go, pretty high numbers, and where we think it can still go. So where can it still go, right? That's the question. So today we raised our target. Now, this is not a one-year target. This is a longer-term target. So that's only about $1.5 trillion. So we're not going from 1 trillion to 2 or 3 trillion. Right now, we're going only about 1.5. And that's about, target zone is a little over $500. But I go back to the money flows I said, and if that kind of selling continues into the strength, then I wouldn't be surprised that if the overall market pulls back, that this stock can pull back from here good $30, $40, $50, $60.
Well, Nigam, we appreciate you highlighting all of that for us, a real look under the numbers and under the surface of Oracle and its strong performance today. We appreciate your perspective as always. That's Nigam Arora from the Arora Report.